As I sit here and record this, America's S&P 500 index carries a stock market valuation of $42 trillion US dollars, or some 60% of the global total, as benchmarked by the FTSE All-World Index. Now, within the S&P 500, 7 firms, Alphabet, Amazon, Apple, Meta, Microsoft, Nvidia, and Tesla, have an aggregate valuation of just under $13 trillion. That's 1/3 of the S&P 500's valuation on their own, and thus 1/5 of global market cap. In sum, where America goes, the world may tend to follow, and America's stock market fortunes are very closely tied to those 7 firms. History will tell you that prior occasions when the US market was being driven higher by a relatively limited number of stocks, technology in the late 1960s, the Nifty 50 in the 1970s, and technology again in the late 1990s, well, the trend finally ran out of steam and caused quite a lot of chaos in the process. So it'll be worth keeping an eye on this septet this time around, given their current influence. With this in mind, this week's video is going to stay stateside and look to Apple's second quarter results that are due for release on Thursday the 2nd of May. Apple will be the penultimate member of the Magnificent Seven to report for the quarter. Nvidia will be the last one to report, and that's on the 22nd of May, as it's the only one whose quarter ends in April, not March, thanks to Nvidia's January year-end. Now, Apple shares are trading at a 12-month low, and they're no higher now than they were in late 2021, despite how services revenues and earnings per share, or EPS, both set quarterly records in the company's first fiscal quarter to December. This could just be the results of the overall results for fiscal 2023, which showed no growth in earnings per share. Data from consultants IDC, which show a 10% year-on-year drop in iPhone sales in the January to March quarter, for which we're about to get the numbers. Ongoing regulatory pressure in America and Europe, or just the company's $2.5 trillion stock market valuation, which represents about 25 times this year's forecast profits based on analyst consensus forecasts. Whatever the reason, analysts and shareholders will be looking to Chief Executive Tim Cook and Chief Financial Officer Luca Maestri for a strong second quarter in the 3 months to March, and some upbeat guidance for the third period, which will cover the 3 months to June, although Apple of late hasn't really given much guidance at all. When it comes to the second quarter numbers, analysts will initially home in on 2 headline figures. The first is sales, where the consensus estimate is $89.8 billion US dollars, down 5.3% year-on-year, compared to the 2.1% year-on-year increase in the first quarter. In the unlikely event Apple gives any steer for Q3, analysts looking for $82.7 billion, up 1% year-on-year. The second headline number is earnings per share, or EPS. Here, analysts are looking for $1.50 a share for a net income of around $23 billion, down a fraction from $1.52 a year ago. In Q3, analysts are looking for $1.31, marginally higher than the third quarter of fiscal 2023. Analysts and investors will then look to the divisional mix of sales. In the first quarter, services was the only segment that rose by a double-digit percentage year-on-year, as the app ecosystem again proved its power, while wearables and iPad sales both fell at a double-digit clip. The services business is high margin, with a gross return on sales of 73% in Q1 compared to 39% from hardware products. So ongoing progress here is important, as it supports sales and profits growth and also cash flow. And with growth still looking a bit modest, thanks to slow upgrade cycles, competition, regulation, and frankly the law of large numbers, many investors will look to Apple's cash flow for encouragement. That cash flow supplements Apple's still hefty net cash pile, which came into nearly $67 billion in December, although do note Apple's actually got $106 billion in gross debt, and the interest costs could start to tickle up there and become a greater importance going forwards. However, this powerful cash flow, added to the net cash pile, enabled Apple to pay out $3.8 billion in dividends in Q1 and buy back $20.1 billion of stock in the same 3 months. That took the total cash returned to investors to $782 billion, $148 billion in dividends and $634 billion in buybacks, since Apple first returned cash to shareholders in 2012, when the firm's market cap was just $440 billion, so you've made nearly twice your money. Apple's expected to declare an unchanged dividend, by the way, of 24 US cents a share in this coming quarter. Hope that you and your families are all keeping well. Thank you for watching, and I look forward to seeing you again next time.